Good afternoon, students. Welcome back to this discussion on audit. So we have been discussing about the audit of financial statements in terms of various line items which are there. I think so far we have discussed quite a lot, and I'm just hoping that you would now be quite clear in terms of the approach we have been considering now. Because important thing is not to discuss the procedures. Important thing is to understand the approach. Yeah, because if you'll be able to capture the approach, then all of these audit procedures will become very, very easy for you to design. Number one. Number two, even if there are some situations which demand you to assess that in terms of what procedures is required to be considered over there, and along with that, what assertions are getting linked to that. Okay, so through that approach, you will get complete clarity around this. Yeah. Okay, so now in the previous session, we started discussing inventory. Okay, so what I'll do is I'll just do a quick recap in terms of what we discussed about inventory. And today we'll then structure some audit procedures around it. As around inventory, if you consider this particular line item in the financial statements. So this is again a very important item, particularly for the companies which are into manufacturing. Okay, why? Because this manufacturing activity is involved over there. Some sort of processing is involved as compared to the companies which are into trading. Okay, so wherein the process of manufacturing goes down. So you can say some part of assessment as far as the auditor is concerned goes down if the manufacturing is not involved, if it's only a trading. But in both the cases, whether it is about the manufacturing or the trading, inventory will be there. And the moment we say inventory is there, so of course, all of those procedures around the inventory will have to be applied, right? So now, talking about inventory, so can you tell me what all items do you have in case of inventory? So what does this inventory comprise of? Over to you. What does the inventory comprise of? Yes, quickly, over to you. If you look at the inventory, what does it comprise of? So we can say raw material, finished goods, WIP. This is what Prem says. And I think same is the answer from Almas. Correct? Okay, so now as if this raw material goes in the process of manufacturing and the manufacturing is incomplete. So that is what you call as work in progress. And once the manufacturing gets completed, that is when you get the finished goods. Okay. Plus the company may also have some traded goods, means wherein the manufacturing is not involved. Plus there could also be certain line items like stores, spares, etc. Okay, so these line items could also be there, right? Now, so this is what we have in terms of inventory. Okay, so that's what we understand about inventory as far as its breakup is concerned, or the nature is concerned. Now, what are going to be the important procedures in relation to inventory? So I think the most important procedure in relation to inventory, and we also touched upon that in the previous session, happens to be around the existence. Yes or no? Yeah. So the most important procedure that we touched upon was in relation to existence. So if somebody has to verify the existence, now existence is not only in relation to raw material. This is also in relation to WIP, finished goods, traded goods, stores and spares. Yeah, so whatever is the nature of the inventory, for all of those items of inventory, this existence assertion becomes important. Yeah. or you can say this will become relevant for all of them. Now, in relation to existence, what is required to be done? Physical verification. Okay. So if the physical verification is performed, means if the inventory is physically verified. So if the auditor will go and check whether the stock is actually there. So what does he verify in such a situation? Existence. Existence only. Yes or no? Now, in relation to this existence or in relation to this physical verification procedure, it appears to be quite simple. Yeah, so we may think that for a company, this physical verification should be done by the auditor. But just think about a company, okay, which is quite large. Or even if we talk about, say, some of the medium-sized companies, or even if we, let's suppose, talk about small-sized companies, but which have got huge items of inventory, may not be in valuation terms, means in terms of amount, it may not be very, very significant, but in terms of quantity, it may of course be significant. Okay, so now in such a case, what do you do? In such a case, how do you think this physical verification will be performed? Because how will the auditor go and physically verify that? Okay, so that's a question. So let's take a situation. Okay, so I think Rihanna has an answer to this. Rihanna is saying sample checking can be done. Of course, but first of all, if we consider this situation, okay, so we understand the challenge which is involved in terms of physical verification. So let's suppose there's a company, okay, this company, let's suppose, has got 8 locations across it. Locations means its inventory is lying at 8 locations. Yeah, for some of the companies it could be 50 locations, 60 locations. Yeah, so the number of locations could be numerous. Okay, then if you look at the location, for every location the size of the inventory is quite significant. So it's not that on some of these locations or on most of these locations inventory is quite minuscule in terms of amount or quantity, means in terms of size. No, that is not the case. So if we talk about the inventory which is required to be physically verified, so we are talking about inventory which is quite significant in terms of size. Okay, so now let's suppose if the auditor were to verify this physically. So now, practically, do you think it will be possible for the auditor to go and physically verify all of these locations? Or maybe at all of these locations, entire inventory? Or even if we pick up some of the locations, entire inventory at some of the locations? What do you think? Will it be possible? Tell me, will it be possible for the auditor to go and do that? Rihanna says no. It's not possible for the auditor to do that. Okay, so now in such a case, excuse me, in such a case, what will the auditor do? In such a case, what will the auditor do? Of course, auditor will have to pick and choose. Yeah. So that means sampling will have to be involved. Okay. So that means if we are talking about this particular procedure of physical verification, here again, we need to be clear that physical verification will also be involving a sample. Okay, it will not be done on a 100% basis. Fine. Yeah, so this will again not be done on a 100% basis. Some sort of sampling will be required even for physical verification. Okay, now the question arises that how should this sampling be done to begin with? Over to you. Any thoughts? I'm sure some of you may have may have worked on this, may have actually done this physical verification for some of the entities. So how do you think this physical verification should be planned? What will become the basis? What will be the approach for physical verification of inventory? Tell me quickly, over to you. So how do you think auditors should go about this physical verification? What should be done in respect of this physical verification? Tell me quickly. Any thoughts? Any thoughts? Okay, great. So Shreya shared a point. Period end should be chosen. Okay, so Shreya is saying one thing which can be done is we can choose the period end for physical verification. Means we'll not be picking the inventory for throughout the year. Okay, so which anyways is supposed to be done. So when you do this physical verification, this has to be done for the period end. Sunil is saying area of a warehouse could become the basis. Yeah, so that area of warehouse you can definitely consider for assessment of the size of the inventory. Okay, or for some qualitative parameters in terms of how the inventory is stacked, placed. Yeah, so some of those factors could be considered. Okay, but the question arises that in terms of this inventory, which is required to be physically verified, the approach will be ABC analysis. Okay, so this is what you call as ABC analysis. Now, what do you mean by ABC analysis? A would mean high value items. Okay. C would mean low value items. And B would be those which are there somewhere in between. Okay. Yeah. Which are neither high value nor low value. Okay. So let me just call it as average in terms of valuation. Or you can say medium category. Now, what do you mean by this high value, low value, or medium category? What is this ABC analysis all about? See, ABC analysis talks about an approach which is generally considered by the auditors for selecting the inventory for physical verification. Which means that if let's suppose company has got say inventory at 8 locations to begin with. So what will the auditor do? In this case, auditor will pick up the total inventory. Okay, so auditor will look at the population. In terms of the population, auditor will divide the inventory first of all in terms of valuation, means in terms of valuation, which are the high value items. Because the more items which are of high value are picked up, selected, the more value of inventory will get selected. Yes or no? Yeah. Yeah. So that's why sample size would be selected in such a manner that more of items which are of high value in nature will be selected. Okay, so that's going to be the first parameter. And majority of these items which are of high value are selected. Majority. Okay. Then second, will be the medium value items, which are again selected but slightly lesser. Okay. And then third, low value items, which are again selected, but again slightly lesser. Why? Because if let's suppose there are a lot of items which are of low value, and if they comprise of only 5% of the total inventory, so there is no significant risk. Why? Because other than the low value, if you look at the high value, if you look at the medium value, they comprise of 90%, 95%. Okay, so if you are covering that, then in a way you are covering a significant chunk. Okay, which doesn't mean that the low value items will be ignored. No. So we are not saying that the low value items will be ignored. No, that's not the case. Low value items will also be selected. But in terms of selecting the sample, in terms of selecting the items, it will be more from high value and lesser from low value items. And of course, accordingly, lesser as compared to high value items from medium value items. Okay. So this is the first approach. Now, how does this approach work? So if let's suppose there are 8 locations, say if the auditor covers 5 locations, okay, let's suppose 3 locations are left altogether. They are not planned at all. Okay, 5 locations are covered out of this only. And if the auditor believes that by covering 5 locations, majority of the inventory will be covered. Yeah, majority of the inventory will be covered. And for the remaining 3, the valuation will not be very significant. So can he ignore that? The answer is yes. So is it necessary for the auditor to cover each and every location, each and every inventory? The answer is no. Yeah, but he has some basis, has some logical basis for selecting all of these items, for selecting all of these locations, for selecting all of these types of inventory items that he will select. Clear on this? Yeah. Now, other than that, as far as physical verification is concerned, here again, there are 2 aspects which are attached to that physical verification. See, when it comes to the physical verification, so physical verification is not something which only auditor is required to do. Management is also required to do. And the management will not be picking up this approach of only doing selected items. Management will be doing the physical verification of entire inventory. Yeah, why? Because for them, control over the inventory is required to be established. Yeah, so they will have to plan this in a way that this entire stock gets covered. But does it mean that during this process of coverage of everything around the inventory, auditor should stay engaged? It again depends on the discretion of the auditor. So it's something which the auditor needs to assess. Auditor needs to decide. On the basis of his assessment, he needs to take a call as to what is the extent, what is the coverage he plans to do. Okay, yeah. So that's going to be the approach on the part of the auditor. Clear? Everyone clear on this? Yeah. On physical verification, any questions? No? Sure. Tell me any questions, any doubts so far? No? So I'm just hoping Dhanush again doesn't have any question. Okay, no worries. Rihanna is asking, sir, only the ABC analysis is used? See, sampling is done. So that's how we need to consider it. But for selecting the samples, first of all, this entire population is broken into ABC. Okay. And to say that, will it be done by everyone? Yes. I see whatever I have seen so far, everybody will do that because that will always be the logical basis of segregating the total population. Yeah, so even if you will select sample, let's suppose for any type of testing, forget about inventory physical. Let's suppose if you want to check any sample, say for verification of invoices, say for receipt testing, say for tracing the amounts to the books of accounts, tracing the amounts to the bank statements. Okay, so in all of those cases, what will you do? In all of those cases, you will always be looking at high value items. You'll always want to ensure that at least the high value items are covered. Yes or no? You'll always want to do that. So if you'll try to do that, so how will that be possible? So that will only be possible when you get into that segregation. Yes or no? Yeah. And of course, once the high value are covered, so you'll always want to cover some of the low value because low value items cannot be ignored altogether. At least some of them you will cover. Yes or no? Yeah, at least some of them you'll have to cover. So that's how this approach is required to be structured. Okay. Yeah, clear. Now, sometimes in relation to this physical verification, now we are not yet done. Huh? Okay. So this physical verification of inventory is not yet completed. Okay. So there are some more aspects to it. Now, if you talk about this physical verification, yeah, so it appears to be more of clerical exercise wherein you'll just go and physically count the items. Physical verification means what? You go and count the items. Okay, but every time to do this physical verification on the basis of counting may not be possible. Yeah, why? Because in some of the cases, you may have some sort of technical involvement. Okay, the nature of inventory could be such that you just can't go and count that inventory. Okay, for example, let's suppose there is coal. Okay, similarly, let's suppose there is oil. Let's suppose there is steel. Okay, now in terms of their raw form, if let's suppose that is available in their raw form, so how do you go and count them? Possible? No. If let's suppose there are stacks, okay, there are large stacks of coal which are lying at locations spread out over acres of the land. Okay, or let's suppose there are rooms which are filled of coal or say some of the materials which are used for production purposes. So how do you go and physically verify them? Possible? No, not possible. Now the question arises that what if the nature of inventory is such that the auditor is not competent enough to do that physical verification? So what will happen? Something will have to be done. Yes or no? Something will have to be done. So what will happen? So if that is not possible, what will you do? Any thoughts? Any thoughts? Very good. Prem says expert will be required in such a case. Great. Now, if you get into such situation, okay, so there again, there are two parties. Huh? One is the management and the other party is the auditor. Okay, one is the management, other party is the auditor. Now, in this case, if let's suppose two parties are involved, management and the auditor, in such a case, management may involve an expert. Okay, management may have the management expert. And this management expert could be involved in the physical verification exercise. Now, this management expert could again be internal or external. We don't know. Okay. And is that really relevant? The answer is no, doesn't matter. Huh? Management may have hired a third party, so it could be external. Management may have some internal, means they may have some in-house team which is the expert in terms of doing such sort of physical verification, which is technical in nature. So that is again possible. Yeah. Now, in such a case, if let's suppose management expert is available, but the auditor is not competent enough. Okay. So management is competent now. Yeah. Why are they competent? Because they have got the expert, but the auditor is not competent. So in this case, what do you think should be done by the auditor? Over to you. In this case, what should be the course of action on the part of the auditor? Over to you. Tell me, what is it that the auditor will do? Or do you think anything is required to be considered by the auditor in respect of the physical verification? Is there any such thing which is required to be looked at? Any thoughts? Yes? Any thoughts? Any thoughts? Anyone? Quickly. Quickly. So we are talking about a situation which is very much practical and which could be there. So what will you do? So as an auditor, how will you handle? What will be the course of action? Quickly. What are your thoughts? Anyone? Yes, quickly. What will the auditor do? So I think Dhanush had a question. Yes, Dhanush, I'll come to your query slightly later. So I think somebody just answered this. Let me just look at this. Okay, great. Prem is saying if let's suppose management has expert has hired an expert, then the auditor will perform inquiries with the expert hired by the management. Okay, fine. But tell me one thing, that when the auditor is not competent enough, and if he performs inquiries, he makes inquiries from the expert, do you think those inquiries will be relevant or will be good enough from the auditor's perspective? The answer may not be yes. Yeah. Why? Because when auditor doesn't know about something in detail, so how will he verify that? How will he question the other party? Not possible. Yes or no? It's not possible. It's not easy. So in such a case, what will be the course of action on the part of the auditor? Very simple. Huh? I'm sure you would have covered this earlier. Yeah. In such a case, auditor will also be required to engage one auditor's expert. Remember, two experts are possible. One, which is the expert of the management. Second, which is the expert of the auditor. Means auditor will also engage an expert. Now, this expert of the auditor could again be internal or external. Okay, so this could again be internal or external. So it doesn't matter. Okay, so you should not think that it's only internal or it's only external. No, same way. Yeah. But the point is, the important aspect is to understand that when the auditor is not competent enough, and if the auditor will just simply look at the report of the management expert, so will that be considered as good enough? The answer is no. If the auditor starts questioning the management expert, so will he be able to do that in an appropriate manner? Again, no. Why? Because that's not his competence. Even if he tries to do that, he may not be able to do that uh, with the right set of questions, one can say, okay, which can lead to the overall objectives as far as this physical verification is concerned. Correct. So therefore, in such a case, auditor will have to evaluate involvement of an expert by the auditor. Okay. Yeah. And once the management experts are involved or auditors expert is involved, in both the cases, there are separate auditing standards. I'm sure you would have covered that already. Yeah. And in terms of both of that, whether it's the management expert or auditors expert or both of them, eventually the responsibility will continue to remain with the auditor. Okay, so his responsibility will not go down. His responsibility will continue to remain. Okay, his responsibility will continue to remain. So this will not go down. Okay, so this will remain. So this is something which is considered important, which is required to be looked at. Okay, yeah, clear on this? Clear on this? Yeah, everyone clear? Any questions as around the physical verification? Any doubts so far? Okay, so Prem is clear. Let me just go to one query of Dhanush. So Dhanush is asking, I think Ovia mentioned this, auditor can get a expert opinion. So it's not about expert opinion, I would say. It's all about engaging an expert. Yeah. Then I think Dhanush had this query. He's asking, sir, in cash and cash equivalent, we cannot use sampling as in case of inventory. There are many locations and inventory levels. How can we take sampling as medium? See, cash and cash equivalent in terms of its nature is quite significant risk area. Okay. Inventory, again, no doubt is a significant risk area, but you can't really compare inventory with cash and cash equivalent. See, for cash and cash equivalent, what will you have? If let's suppose company has got, say, bank balances, fixed deposits, some sort of investments, okay, cash in hand, say all amounting to, even if let's suppose it is 45 crore, okay, or let's suppose if you mix up OD and all, if let's suppose that is 250 crore. In all of these cases, what is it that the auditor is required to do? So is he required to go and physically verify that? No, he'll only be obtaining the confirmations. Correct. Currently, for the inventory, just think about a company which is having, let's suppose, 60 locations. Okay, and the number of items of inventory, even if we talk about one inventory type, in a company, there could be thousands of types of inventories. And every inventory type could be running into thousands. Okay, so we are talking about counting crores, or you can say going beyond crores in terms of counting. So if you talk about physical verification of each and every item, then the auditor may end up spending 365 days for doing that physical verification. And even in that case, it may not get completed because the inventory will keep changing. Inventory will not remain constant because the company will have to keep running its business also. Yes or no? So the business will not be stopped. Yeah. So the inventory will keep increasing, will keep decreasing. Why? Because it's purchased and sold. So in such a case, what is it that the auditor will do? Yeah. So very, very challenging, and practically impossible for the auditor to do that. And it's not something which is practically done in any case. Even if the company will want to do that, and in some of the cases, those will always be limited cases of high value, not for low value or for medium value. So that's the rationale. Okay, clear, Tanush? Yeah, I'm just hoping you're clear on this now. All right, so now continuing further on inventory. See, as we talked about inventory, like bank confirmations or debtors confirmations, or you can say direct confirmations. See, like that is considered to be a very important procedure in some of the cases. For example, banks, debtors, borrowings that we discussed. Similarly, when it comes to the inventory, a very important procedure happens to be the physical verification. Yeah, so that's how inventory is required to be considered. This is how it's required to be looked at. Okay. Now, moving further. Now, let's talk about the accounting of inventory. Okay, so far we only talked about the physical verification or the physical count of the inventory. Now, when it comes to the inventory, we discussed in the previous session that inventory is a built up. So once you'll have this raw material will get into the procurement, this manufacturing process. So one, you'll have the raw material which will get into the manufacturing process. It will remain WIP till the time manufacturing is completed. And once the manufacturing is completed, that is when you get onto the finished goods. Now, for the verification of raw material, can you tell me what are the procedures that come to your mind? Over to you, quickly. If you were to verify raw material, what are some of the procedures that you will consider? Quickly, over to you. I think so far we have discussed a lot of procedures, and we have also discussed the approach. So for raw material, what all procedures, what will be your approach? Okay, great. So Prem is saying we'll check the purchase invoices. Good. Rehana is saying we'll check the stock records. Very good. So one is you're saying purchases will be verified. Purchases verification means we are in a way talking about the P&L component of purchases, and we discussed that inventory is also in a way linked to the procurement process. Yes or no? Yeah, but we are not completely drifting to this procurement process. Okay, so now in relation to purchases, invoices, these will be verified. Number two, stock records in terms of inflow and outflow, which is there. So that will have to be looked at. Priyanshi says valuation of raw material. How much raw material is required? See, how much raw material is required is more of a management assessment. That doesn't have any financial implication and has got nothing to do with finance. Okay. Therefore, how much raw material is required? Let's suppose company needs 1 lakh units, but it is holding 10 lakh units. Will that be a problem? No, it's up to the management. So if they have higher inventory, if they are uh, keeping the stock higher than necessary, of course, this can always be a suggestion. But as far as audit is concerned, this is not a problem. Okay. But yes, valuation is important. Okay. So now, when it comes to the valuation, So tell me, how do you value raw material? How do you value raw material? So valuation, what will become the basis? You will value that at cost. Yeah. And there's also a concept of taking it to its NRV if in case the raw material can only be used for certain categories of finished goods and those finished goods are recorded at NRV. Yes or no? Yeah. So that accounting criteria which the management will have to consider, auditor will also have to consider. Remember? Yeah. So that accounting standards we need to consider. Okay, because they will give us the accounting answer and auditor will have to consider all of those accounting answers. Yeah. Okay. Okay. Now, Priyanshi is saying comparing the prices or the costs with the market prices. Yes, of course. So you're saying in a way when these purchases will be verified. So one, you will verify the purchase rate, which will be through the invoices or the agreements. But you'll also be checking the quotations because the management must have had some process of obtaining the quotations, huh? So that the items which are getting purchased, they are purchased at a reasonable price. So some sort of that assessment by the management would have been done. So that is again something which the auditor needs to evaluate. Auditor would have looked at, yeah, which is then required to be looked at by the management also and auditor also. Okay, so that part will also be done. Now, let's talk about WIP and finished goods. Let's talk about these two items, WIP and finished goods. Now, in this case, what are going to be the components of valuation? Because inventory is all about value, correct? Because what does this inventory comprise of? Two things, quantity and rate. Quantity and rate. So quantity has already been verified physically. Yes. Rate is something which is yet to be verified, or you can say the cost. Now, when it comes to WIP or FG, in this case, there always be a component of raw material which will become its cost, or you can say this will add to the cost of the WIP or FG. But over and above that, there are various costs which are added to the costs of the inventory. Can you name some of those cost components which are added to the cost of the inventory? Over to you. Can you name some of those cost components which are added to the cost of the inventory? Tell me quickly. Prem says labor cost. Very good. Okay, so one is the labor cost. Rihanna says process cost. So what do you mean by process cost? You need to tell me the components. Okay, great. Prem says overheads. Yes. Yeah, so labor cost will be there. Overheads will be there. You can say various components. For example, electricity cost will be consumed. Building depreciation will be there. Rentals will be there. Sunil is saying rental will be there. Yeah. Similarly, consultants may be working. Some sort of technical consultants may be engaged. Engineers may be working on this production process. Yeah. So their salaries would be involved other than the labor. So means the salary cost could also be there. Yeah. So there are so many examples of various types of costs which may be getting added to the cost of the inventory. Yes or no? Yeah, so there are so many line items. There are various components which get added to the cost of the inventory. Now, as an auditor, what is going to be the audit procedure? Auditor will have to audit this valuation. So what's the assertion now? We are talking about the valuation. Okay, so we are talking about the valuation. So now, in terms of this valuation, there are a couple of things. One, whether some of these cost components, okay, some of these cost components, should they actually be loaded to the cost of inventory or not? Number one. And if yes, then what should be their amount? Now tell me one thing. If let's suppose some marketing expenditure has been done by the company for launching a new product, okay? So let's suppose this finished good which is getting manufactured. We are talking about this finished good. Okay, let's suppose it's a new product. Company has been spending significant cost on its marketing. Now in this case, you find that this marketing cost is also included in the cost of the finished good. Okay, let's suppose when you check the valuation, so there was a valuation sheet which is also called as the cost sheet. Okay, or if you look at the workings of the inventory, so you found that the marketing cost is also included, and similarly you also found there are some components of the costs which are included other than the marketing cost. Now, how will you deal with that as an auditor? If let's suppose you are the auditor of that company, how would you deal with that? What will you do? So is an insurance cost? Yes, of course. So let me just write that as an example. But my question is that how will you deal with such of these types of costs? Tell me quickly, how will you deal with them, with such types of costs? Frame says in AS2, WIP is valued at selling price of FG, further processing cost. Okay, so that's good. So you are just talking about the literature right now. Okay, so what is there in the literature? But my question is that currently you are looking at the valuation. You found some of these components included. Okay, so the components which are there in front of you: labor cost, salaries, etc., overheads, okay, insurance, marketing cost. So what will you do? So how will you handle that as an auditor of the company? So that's my point. So what will you do? Over to you quickly. As an auditor, what will you do? What will you do? As an auditor, what will you do? Okay, Prem says we'll look at the cost sheet or cost accounting. No, cost sheet you are looking at. Okay, cost accounting again you are looking at. Now the point is very simple, that this marketing cost which you observed. So tell me one thing. Can the marketing cost be included in the cost of the inventory? Tell me, everyone. Do you think marketing cost can be included in the cost of the inventory? Will that be appropriate? Yusuf says no. What about others? Yes, quickly, quickly. Can the marketing cost be included? If the answer is no, so what will happen? Auditor will have an observation. Auditor will have this discussion with the management that why is this included? And of course, this needs to be rectified. Yeah. Some of the other components you'll always go and verify. Again, looking at the principles of the accounting standards, whether those are appropriate or not. Yeah. But some of those which are not appropriate, they need to be excluded. Yeah. So the valuation will have to change then. Okay. And for those components which are included, let's suppose a labor cost is okay. Okay, let's suppose insurance cost is okay. But there again, auditor will have to understand that which labor is this. Let's suppose company has got three plants. Okay, let's suppose company has got three plants. Plant 1, plant 2, plant 3. Yeah. So if let's suppose this finished good FGA is getting manufactured at plant 1. Okay, who is involved in production of A? Employees of plant 1. So now, is it possible that cost of employees of plant 3 be included in the cost of this product A? Tell me, will it be appropriate? Will it be appropriate? Over to you quickly. What do you think? Prem says no. Rihanna says no. Sunil is also saying no. Very good. Bishra, Almas, they are saying no. See, that's what you are also required to look at. So it's not only about the nature. So there are two ways you'll filter. There are two ways you'll check that whether the nature is appropriate or not. And if the nature is good, if the nature is correct, means in terms of the items which are loaded to the cost of the inventory, then is their amount correct? Why? Because cost of employees of plant 1, let's suppose is 10 lakhs. Cost of employees of plant 3, let's suppose is 15 lakhs. Now in this case, what do you find? 25 lakhs is added to the cost of product A, which is not correct. Okay, which is not correct. So what should therefore be included? It should only be 10 lakhs and not 15 lakhs. Yeah, so that is the approach which the auditor needs to consider. Okay, so therefore this number has to change. And how will the auditor do that? Auditor will have to obtain the workings of all of these cost sheets. And before that, auditor will have to understand the manufacturing process. Because without understanding the manufacturing process, auditor may not be able to get into this complete assessment. Yes or no? He may not be able to do that. Yeah. Further, once this cost, let's suppose, is assessed. Okay. Let's suppose auditor has done the assessment of cost. Now, what is going to be the next step? NRV. Now, if we look at the requirements of accounting standard on inventory, what does it require in terms of its valuation? Can somebody explain? If you look at the requirements of accounting standard on inventory, what is the valuation criteria? What is the valuation methodology? Over to you quickly. Quickly. Very good. Almas says cost or NRV, whichever is lower. I think same is the response from Shivansh, Prem, Bashra, Sunil. Great. So in this case, once the cost is assessed, auditor will also be looking at the workings of NRV. For all the items of inventory. So these workings of NRV will be obtained. Now, if let's suppose the management says that there is no item which is recorded at NRV, all of them are at cost. Okay, let's suppose there's a situation. Yeah, you need to explain this now. Say there is a company A Limited as at the year end, let's suppose 31st March 2025, auditor has found all the items of inventory are recorded at cost. Okay. None of the item is recorded at NRV. No item. Okay. So when the auditor asked for the NRV workings, management is saying that NRV workings are not there. Why? Because everything is measured at cost. So in such a case, what will you do as an auditor? How will you deal with this situation as an auditor? Quickly, any thoughts? How will you deal with this situation as an auditor? Or what should be the audit procedure here? If you can just let me know along with the assertion which is attached to that. In this case, as an auditor, what will be your approach, your audit procedure, along with the assertion? Quickly, quickly, huh? So let's try to understand. See, in this case, if the management has not recorded anything at NRV, how will the auditor get to know about it? Do you think verbally it will work? The answer is no. Answer is no. Verbally it will not work. Shivansh, we are discussing this now. So therefore, if the management has not recorded at NRV, management will have to substantiate this. Okay, management will have to substantiate. So how will the management substantiate? By showing the NRV for some of the items. Ideally, the management should prepare a work wherein for all the items they should have the NRV. Okay, so they can just go show to the auditor that see, these are the NRVs for various items. They are all above cost and therefore cost has been considered, which will be good to go. Okay, but if let's suppose that doesn't happen, if let's suppose that is not the case, that is not done, so what will the auditor do? What will the auditor do? Auditor will have to look at that. Yeah. And some of these NRVs which the management will provide, auditor will have to do a sample verification. If the working is available, auditor can always flip through that entire working, and of course pick up some samples for the verification also. Okay, so that's how auditor will be able to substantiate, verify. And in this case, which assertion is getting tested? Valuation. So all of these things we are looking at are what? They are all in respect of valuation. Okay, so they are all in respect of valuation. Clear? Clear on this, everyone? Yeah, they are all in respect of valuation. Okay, yeah, clear? Everyone clear? So I think these are some of the procedures in respect of inventory that we just discussed. And of course, there are various other procedures which are possible. If you link this inventory to the procurement process, because this process will then be including the procedures on the purchase, but that will be covered by us separately. Okay. So now what we will do is we will just again flip through the audit procedures from that study. Okay. So Prem has a question. So Prem is asking, sir, management must prepare the workings? See, yes. Management must prepare the workings if the management has not prepared, they will have to show this to the auditor. Okay, so at least some working they will have to prepare. Only then they will be able to show this to the auditor that this has not been done, or maybe this is the reason as to why this has not been. At least some of these things they will have to show. Yeah, clear? Okay, so now let's move on to audit procedures. So what we will do is in the study material again, we'll look at some of them in terms of the language part. Yeah, so that's the approach. Okay, now existence of inventory. For the existence of inventory, what do you do? Review entities plan for performing the physical count. Yeah, so means that entire process of physical verification you'll have to consider. Okay, you'll have to understand the management process, their inventory listing, how that is spread out, so that you can identify the nature of items to be covered, size, you will be able to assess, so that you can also cover the locations if at all it's a multi-locational situation, or if let's suppose it is not multi-locational situation, so what is going to be the size that you have to cover. So all of these things therefore will have to be covered by the auditor. Okay, so I think this is all about physical verification. Then, as around the inventory, now on this inventory, some of the analytical procedures can also be performed. So how will you do that? So these are more in blend with the P&L component, but we can just talk about it. Means what is the size of the inventory as compared to the total assets? And is this increasing or decreasing year on year? Okay, is this increasing or decreasing year on year? One. Then inventory turnover ratio. Again, a very important KPI from the investor's perspective, from the management perspective, means how quickly the inventory is getting rotated. Okay, so that again is a very important parameter for evaluation that will also have to be looked at. And then, of course, in some of the cases, the budgeted numbers which the management will have, they can be compared with the actual numbers. Okay, so that can also become one of the basis. Okay, then the non-financial information related to inventory, such as their weight, measurement, okay, which is more of the qualitative assessment, which is something which auditor will be looking at more in the physical verification side, not in the other side. Yeah, generally. Okay, then of course, in terms of the cutoff testing, when the sales cutoffs are performed, purchase cutoffs, but that is again more from the P&L side. So we'll just move it to the P&L component. So when we'll cover the P&L component, therein we'll just try to cover that aspect. Okay. Now, moving further, if let's suppose now again a very important procedure as around the inventory could be there, which is in respect of inventories lying with third parties. So sometimes the nature of business of the entity could be such that its inventory is lying with third party. For example, job worker. Say some material is sent to job worker, he will do some processing and return. So at the year end, some material is available with the third party, physically not available. Okay, so that is something which is required to be verified by the third party, number one. And of course, if required, physical verification should also be planned in respect of such type of items as well. Similarly, if let's suppose company has a mechanism wherein the goods are received on consignment basis. Okay, so now that is again the inventory which is not of the company, you can say, which is not controlled by the company, which the company in a way is holding on behalf of third party. Okay, so How will that be covered? Should that be considered as the inventory? The answer is no, that is not the inventory of the company. But when the physical verification is performed, so that is required to be sort of segregated from the other inventory so that they don't get mixed up. Okay, because if they get mixed up, so the physical verification may not be proper. Okay, so that is again one of the important aspects. Okay, Bashra has a query. Bashra is asking if physical verification is not possible due to any reason, we have to apply other procedures like verifying the accounts and records. No, so see, as far as existence is concerned in relation to inventory, there's no alternate procedure available. Okay, there can always be a situation that the physical verification, say, is not possible on 31st March. Okay, that is possible. Okay, on 31st March, it was not possible. It can be done on, say, 10th of April. Okay, so it may not exactly be very close to the year end at times. If at all you find there's a challenge, generally those challenges are also required to be taken care of both by the management and the auditor. That's how the audits are required to be planned, including the physical verification. But to say that physical verification is not possible will have to be very, very critically evaluated. Okay, I have never seen such situation, but existence, that assertion will be a big, big question mark. Okay, so if you are not clear, if you don't have the comfort that whether the inventory physically exists or not, so what will happen in terms of your conclusions? An inventory generally being a key item in the financial statements. If there is a question mark on that, so what will happen? Again, the problem will arise, and problem will be in relation to again the same thing, and that will be the conclusions, how the conclusions are drawn, how the reporting is required to be done in such a case. Okay, clear? Yeah. Okay. Then of course rights in relation to inventory, which will be through the verification of the supporting documents, be it invoice, be it POs, be it agreements. Yeah, so all of those supporting documents are required to be verified. Then I think valuation is a very, very important aspect, because valuation is also a very challenging area. So why is this critical? It's also critical because it's very challenging. And in some companies wherein this entire process is done in a manual manner, so the chances of error also increase. Okay, so that's why a lot of focus of the auditor is generally there on the valuation part. Okay, one of course is on the cost components, then on the basis of valuation which is there, then on the cost or NRV, so that NRV comparison. So all of these aspects are required to be looked at. Okay. Then, then of course, if we look at the last procedure, and as we have been discussing, so this is something which is universal, yeah, which you get to see everywhere, and that is what presentation and disclosure requirements. But I think this becomes relatively simpler. Why? Because herein you have this fairly simple presentation requirement of breaking down the inventory into various items: raw material, WIP, finished goods, then you have stock in trade, stores and spares. And again, depending on the nature of inventory, the segregation which the company may have to follow, so which arises from the requirements of accounting standards, Schedule 3. Yeah, so all of these things are required to be considered, and any appropriate disclosures which the standard require, all of those things are required to be looked at. So this is another procedure on the part of the auditor. Okay, clear? So I think with this, we are through on the audit of inventory, some of the procedures which are attached to that, and will now be moving on to the next item, which is about PPE. Very interesting and very, very simple, in fact, because I'm sure everybody understands the accounting requirements. There are a lot of accounting challenges which are there in respect of PP. So we'll talk about that. But I think before that, we can just look at your questions. Any questions, any doubts that you may have? Okay, Ovia is asking, do the management need to record the inventory at NRV? See, yes, of course. They will have to evaluate cost or NRV, whichever is lower. So that's what the accounting standard requires. So they will have to evaluate. Okay. So if of course the NRV is lower, they will have to record at NRV. Yeah, and that's the mandatory requirement of the standard. So therefore they will have to do that. Okay, clear? All right. So I think we can take a break now before we move on to the next line item. Yes. So let's continue after the break. Huh? All right. So now let's continue on this. I can see one query coming from Shivansh. Okay. Yes, Shivansh, please go ahead with your question. No worries. So if that is related to the topic we are covering, we can of course discuss that right now. If you believe your question is related to something else, then maybe towards the end of the session we can discuss. Okay. So accordingly, you can put down your query. No worries. All right. So now moving on to the next item, PPE. Now, in relation to PPE, various audit procedures that we are going to cover, okay, which we'll have to discuss, understand, plan, they will generally be linked to the accounting requirements of PPE. So therefore, it becomes important for us to understand the accounting requirements. We'll have to just get down into the accounting standard related to PPE to understand what are the measurement criteria, what is the recognition criteria, okay, so what all cost components are there, if at all there's any disclosure requirement which is there. Yeah, so all of those aspects will just quickly flip through those points and then we'll design the audit procedures around that. Yeah, so now PPE you will recognize once the definition of PPE is looked at, okay, and that is met. Now, as regards PPE, it is always required to be measured at cost. That's something we understand. At the time of initial recognition, when you measure PPE at cost, always, okay, question arises, what are going to be the cost components? Okay, so for PPE, there are three categories, broadly we can say. One is the purchase cost, which includes purchase price, import duties, non-refundable taxes, okay, trade discounts, rebates, etc. Then directly attributable costs, which are there. Okay, so directly attributable costs, which are there. So that's going to be the second component. And third is the decommissioning liability, which is also very commonly called as AR. Okay, yeah. So these are the three cost components. Now, these costs are required to be loaded on the PP. And similarly, when it comes to the cost component, you need to check that cost should be the one which is incurred in relation to acquisition or say manufacturing or construction of that item of PP. If there is anything related to marketing of PP, will you capitalize it? The answer is no. Yeah, so same sort of assessment which we had in respect of inventory, same sort of assessment you'll have here. Yeah. Dhanush is saying third point of elements. What do you mean by third point of elements? I couldn't understand, Dhanush. Okay. So now what we will do is, now we will try to assess the audit procedures. Okay. So the same exercise we'll do in respect of PPE. That for audit of PPE, what all procedures we need to consider. So property, plant and equipment. What are going to be the audit procedures in relation to this PPE? Now, as we discussed, first of all, what is it that the auditor will do? Obtain a listing of PP. Yeah, so let's try to put down some of the procedures. First will be what? Obtain the listing of PP. And can you technically what do you call this? Obtain a listing of PP as? So technically, what do you call that listing as? Tell me quickly. Anyone? Any thoughts? So when you say obtain a list of PPE, what does it mean? What is required to be obtained? Are you talking about the fixed assets ledger? Are we talking about the schedule, which is included in the set of financial statements? So what is it which you will consider? Very good. Shivansh says fixed asset register. Very good. Okay. So now first step will be what? Obtain FAR. Because FAR will have complete details of PP. Okay. Gross amount, net amount, depreciation, location, quantity, everything in relation to PP will be there, which will of course be traced to the books. Okay. So this will of course be traced to the books to check whether it matches with the books or not. Yeah. Now, once this is obtained, what is going to be the next procedure? Next procedure on this will be in respect of additions which are there. What do you mean by additions? Some new assets which have been purchased. Say some machines have been purchased. Okay, some vehicles have been purchased. Some items of furniture and fixtures have been set up. So all of those additions. So how do you go verify them? On a sample basis. Yeah, invoices, agreements will have to be verified. They have to be examined. So that's how you will verify that. Correct. Prem says title deed. Yes, of course. So when it comes to the land, so in case of land, title deed will have to be verified. Yeah, because through the title deed, what do you establish? Can you tell me? Right. Okay. So we are also talking about the relevant assertion to be checked. Yeah. Now, in case of land, in case of various assets, once the additions are tested, what is going to be the second step? Second step will be to get on to the deletions, if there are any. Okay, so if there are any deletions during the year, that you will check. Yes or no? So any deletions which are there, that you'll have to check. So how will you verify the deletions? So if any sale of asset has taken place, say some items of plant and machinery have been sold. So how will you verify them? Through the sales invoices, through the supporting documents, yeah, plus their accounting. So you will look at the supporting documents and the accounting. Means when the sale has taken place. So there would have either been a gain or a loss. So accounting of gain or loss on such sale. So that will have to be verified. Correct. So that will have to be verified. Yeah. Now, further, when it comes to PPE, another important area will be depreciation. Yes or no? Yeah. So this depreciation will have to be recomputed. You can say obtain the workings of depreciation, calculate that, check the calculation. Yeah. Or this can be recalculated. It's all about checking the workings. Okay. So in this case, we are talking about checking the workings. Checking the workings. Because through those workings, you will get to know. Through those workings, you will get to know whether the depreciation has been computed in an appropriate manner or not, means whether the calculation is correct or not. So it's more about which assertion. Can you tell me? So which assertion is getting tested here? Over to you quickly. by very good. So it's the valuation, or you can say the accuracy, correct? Because it's more of the P&L component. So valuation is something you'll have in the balance sheet. Okay. So though we have picked up the P&L, why? Because again, it's linked. Okay. So in most of the balance sheet items, there will be a linkage. Why? Because some impact of those balance sheet items may be going to the P&L. Yeah. So it's similar to that. So it's about the accuracy, and of course, which will have an impact on the valuation of PPE. Okay. Next, now this depreciation will require some basis like useful life, like residual values. Okay. So all of these will have to be considered. They will have to be looked at. They will have to be verified. Yeah. So they will have to be verified, because on the basis of these evaluation of the useful life, residual value, depreciation is getting calculated. Yeah, so of course you have checked the Excel working, or let's suppose if that is getting generated through the systems. Okay, let's suppose it's automated. So your management is using ERP, wherein the depreciation is getting calculated. In both the cases, what do you do? In both the cases, same sort of exercise will have to be done. Yeah, and what is that? These components which are used over there, useful life, residual value, whether these are correct or not. Okay, these need to be evaluated. These need to be evaluated. Yeah, clear on this? Yeah. So it's about the useful life or the residual value. Correct. Then moving further, we have talked about the additions, we have talked about the deletions, we have talked about the uh, depreciation, which is also reducing the value of PPE. Another procedure which arises in respect of PPE happens to be what? Physical verification. You may be thinking that here again, and is it similar to inventory? The answer is yes, but see, the frequency of physical verification in respect of PPE is not necessarily required to be done on an annual basis. Okay. You can say it can be done on a periodic basis. Generally, practically, if you look at the companies, they do this over a period of 3 to 4 years. In fact, even over a period of 3 to 4 years, what the companies will do is they will pick up few categories. Okay, and this is generally for the large size of companies, which are having which may be having huge capex. Okay, which is not easy to be verified every now and then. So maybe the company may plan some part of plant and machinery, or maybe some locations of plant and machinery in one particular year, the remaining part in another uh, financial year, furniture and fixture, or let's suppose other items, say in another year. Yeah, and let's suppose others in another year. Yeah, so this is generally the strategy, this is generally the approach they will consider for the physical verification. So that's how physical verification is generally looked at by them. Okay, yeah, clear. But when it comes to the auditor, now what is the responsibility of the auditor? What is it that the auditor will have to do? See, the something which the management has done, auditor needs to review that. Yes or no? So if the management has done this physical verification, if the management has done this physical verification, Auditor needs to verify that. Okay, and in some of the cases, if the auditor wants, auditor can also participate. But again, it's not something mandatory. If at all he requires, he thinks there is a need for him to participate, that will again be dependent on the risk assessment by the auditor. Because similar to any other thing, auditor will do a risk assessment in relation to PPE. So wherever he believes that the risk is involved, wherein he needs to get going on the procedure related to physical verification. So of course he can just plan the physical verification in terms of some of the selected items. We may participate in the physical verification with the management. So that's how it is also required to be considered. Another thing, now when it came to additions, in case of additions, we talked about the sample. Means on a sample basis, we'll verify what are the additions during the year. But what if the addition is in respect of such type of assets which will take significant period for acquisition or construction? For example, building is getting constructed. Okay, company is setting up a plant which will take another 2 years. Okay, so in these type of assets, wherein again the addition is there. So no, yeah, so they are also in a way covering this category of additions. Can you just simply go and check the invoices? The answer is no. Why? Because they will have various cost components. Now, what are those? Purchase price, purchase costs. Okay, material could be there, which is getting purchased for the construction, and a significant proportion of directly attributable costs will be there. Can you think of some examples which could be there in directly attributable costs in relation to building? Yes, anyone? Some examples which could be there in relation to directly attributable costs. Tell me quickly. Prem says cost of acquisition. No, cost of acquisition, of course, is there. Shivansh says labor cost. Very good. See, same way like we discussed for inventory. Rehana says renovation cost. Yes, of course. Handling charges. Yes, of course. This is what Jendra says. Okay, so handling charges, installation cost. Now, in terms of installation, what do you mean? Okay, so labor cost could be there. Then the consultants cost could be there. Engineers may be involved. They may also be getting some salaries or the consultancy fees. So their cost could be there. Building may be used. Sorry, machines may be used for construction, on which there will either be a depreciation or rental. So that will also get added to the cost of the asset, means the building or the plant. Yes or no? So all of these cost components, auditor will have to review, auditor will have to verify. Yes or no? Yeah. So auditor will have to verify because one, whether the right nature of costs has been included in the directly attributable costs or not. So that is one. Correct. Second, those which are included in terms of their amount, whether the amount is correct or not. Yeah, so if some of these are included, their amounts, so how do you verify? So auditor will have to get into the workings. All of these will have workings, but before the workings, auditor will have to understand the process of this construction. Yeah, this an entire arrangement he'll have to understand. Because on that basis only, auditor will be able to get through. auditor will be able to assess these. Yes or no? Yeah. So all of these aspects therefore become important on the part of the auditor. Okay, clear? Any questions, any doubts so far? Quickly, over to you. Any questions, any doubts? Because what we will now do is we'll move on to the procedures which are there in the study. Okay, so let's move on to the procedures. So same way, we'll just flip through some of those procedures. Fine. Now, one, existence. For verification of existence, what do you do? Physical verification. Entities plan will have to be reviewed. Okay. Here again, same sort of challenges could be there. Yeah. Whether this will be performed by own staff or a third party, and what will be the periodicity? Is it on an annual basis or twice or say once in 2 years or 3 years or 4 years? Okay. Once the physical verification is done, so the physical verification report will have to be looked at. Now, once the physical verification is done, there could be some differences. For example, books may say that the total PPE is say rupees 2 crore. But when you go physically verify that, you found that a PPE amounting to 10 lakhs was not there. Okay. Yeah, maybe over the period of time, those items were discontinued, but in the books they stayed. Yeah, so it's a very, very practical problem. So then you'll have to just reconcile that first of all. Okay, and this is something which the management is supposed to do. So therefore, physical verification report needs to be mapped with the books of accounts. Once that is done, once that is mapped to the books of accounts, any differences which will be there, so those differences need to be reconciled, and the reasons for those differences need to be looked at. If at all the reasons are good, so there's no problem. If at all they require some adjustments, so adjustments will have to be made in the books of accounts. Okay. Then next procedure is about the testing part. Okay, which you'll do for additions, which you'll do for deletions. Correct. So those testing will involve verification of the invoices. If there is an agreement for purchases, the values at which they are purchased. So the quotations would have been obtained by the company. So whether the prices were finalized on the basis of quotations, or is it only one vendor with whom the company has been dealing? Yeah. So some of these aspects are also required to be looked at. Then when it comes to the cost component, what did we discuss? Verify that the cost of item of inventory is as per AS10. Okay, so all of those cost components need to be in line with the requirements of AS10. And what is that? Those categories are that purchase cost, directly attributable cost, all of those costs have to be the one which are included in that category, not beyond that. Okay, similarly for deletions, the supporting documents will have to be looked at. Deletion means the reduction in the value which would arise due to depreciation. So the depreciation workings, the useful life assessment, the residual value assessment, they are also required to be reassessed at every reporting date. So whether there are any indicators which require useful life to be reassessed, and therefore that needs to be changed, whether that has been done by the management or not. Again, these are going to be some of the procedures around the useful life or the residual values. Okay, then as regards the depreciation, again the methods and all, some of these things may also arise, but that is more of a P&L component. So we'll park this more in the P&L part. Next, rights and obligations. Now for the assets, there will not be any obligation. Yes or no? For the assets, it will be a right. But to take care of this assertion, what do you do? What do you do? You'll have to look at the supporting documents, right? So if the company is holding PPE, how will that be supported? Through the invoices, through the agreements, particularly in respect of property, for example, land or building, title deeds, whether the title is clear or not. Yeah. So all of these things therefore become important on the part of the company. Then Bushra is asking, sir, who is the authorized personnel who will approve the PPE additions? See, this authorized personnel is not fixed for a company. It varies from company to company. So company will set up its authority metrics. Every company will do that. Okay. On the basis of that authority metrics, auditor will have to check whether the additions or anything which is in place, whether that is approved by the appropriate personnel or not. Okay, so that's how it's required to be done. Now for doing this, what is it that the auditor will do? For doing this, auditor will have to understand the process involved, and that is where we keep discussing about the process. That is where the auditor will have to understand the authority metrics in relation to that particular process, or if that is applicable to the organization as a whole. Yeah. So all of these things are required to be looked at by the auditor. Okay. Clear? Clear? Everyone? Yeah. Okay. So let's read some procedures around the rights. See, as around the rights, as we discussed, auditor, while performing the testing of additions, will also verify that all PPE purchase invoices are in the name of the entity or not. For all additions to land and building, particularly, yeah, whether there is a conveyance deed, sale deed, to verify whether the entity is the legal and valid owner or not. Auditor should insist and verify original title deeds. Okay. In case entity has given such immovable property as security for any borrowers, and the original title deeds are not available with the entity, auditor should request entity's management for obtaining confirmation from the third party who is holding that title deed. Sometimes it may happen that the title deeds are not available. Why? Because these are given to the bank. So in such a case, this confirmation has to come from the bank that yes, they are holding the original title deed. So the auditor will look at the photocopy available with the company, and the auditor will also obtain the confirmation from the third party. Okay, just to ensure that yes, title deed is there. Okay, and that is good, even if it's physically not there. Okay, then once again, the same procedure which we have for every line item. And what is that? Disclosure requirement, presentation requirement. So PPE, if you look at the face of the balance sheet, there will be just one line item. Yes or no? On the face of the balance sheet, there will be just one line item. But in the notes, there will be a complete breakup on the basis of categories. And there will also be a movement, means what was the opening amount in terms of gross value, any additions or deletions, and the closing balance. on that gross block, what has been the accumulated depreciation in terms of its opening balance? What all depreciation has got added during the year? Yeah. And then the closing balance. And then the net block means gross block. Then you have this accumulated depreciation and then the net block. Again, opening, addition, deletion, and the closing. So this is how it's required to be presented. So you can say in a way, complete movement of PPE is shown in the financial statements on the basis of various categories of PP. So it's a good disclosure which explains various items which are there, but on the basis of the categories, not on the basis of each and every line item. So this is how PP is required to be captured. And once again, what is the procedure on the part of the auditor to ensure that some sort of these disclosure requirements which are there have been taken care of or not? Okay, clear? Yeah. So now, next, we'll move on to intangible assets. Again, a very interesting topic, and to a certain extent, a lot of accounting principles in intangible assets you will find matching with PPE. But before we get on to this, any questions, any doubts that you have so far, please ask me, and then we'll move on to the intangible assets. Over to you. Okay. Any questions? Aditya is saying, sir, please repeat. What needs to be repeated, Aditya? Can you please tell me the point, which point you want me to repeat? Quickly. Anyone else? Any more questions? Before we move further, any questions? If you have. Quickly. Any questions? No? Sure? Aditya, I don't see your query coming up. Okay, so Priyanshi is asking, sir, all points are so similar. Now, see, I would say approach is so similar. I think if you are finding a lot of points to be similar, so I'm sure you must have picked up the approach. And that is what is really required, because once you pick up the approach, so you'll be able to look through various audit procedures. Yeah. And at the same time, please also understand that so far we have been discussing assets. Okay. So, of course, to a certain extent, we are talking about uh, one type of item in the financial statements, which is asset category. Okay, when we'll move on to liabilities, there will be some difference. When we'll move on to P&L, there will again be some difference. Yeah, but to a certain extent, I would agree that yes, approach has to remain same. Okay, so now let's talk about the next item in the financial statements, and that is something which is quite interesting. But I think before we get on to the audit procedures, it's good to understand the nature of this item. I'm sure you would be familiar with this. It's more about its accounting or the understanding of its nature. But it's better to look at that once, okay? Because once you understand that part better, you'll also be able to think through the audit procedures in a more appropriate manner. Okay, now what is an intangible asset? Intangible asset, as the terminology suggests, is an asset which is intangible in nature, means which is without physical substance. For example, trademark. For example, software. For example, brand. Yeah. So these are the assets which do not have any physical substance. Yes or no? Yeah. So they do not have any physical substance. Okay. Now, in relation to these intangible assets, entity should have control and they should be separable, means entity should have a capability to sell them. Okay. So this is more of about the definition. Now, when it comes to intangible assets, similar to what we discussed in respect of PP, at the time of their initial recognition, they will also be measured at cost. Okay, always. And when it comes to the cost component, again, similar to PP, what will happen? For the cost component, once again, what will you do? Cost component will include that purchase cost and the directly attributable costs. Okay. Now, as regards the subsequent measurement, in terms of subsequent measurement, they may be measured at cost or revalued amount. Again, exactly similar to what we have in case of PP. And here again, there will be one component through which its value will go down. And what is that? Can you tell me? Exactly similar to PPE, there is one way of reducing the value of intangible asset. Can you tell me what is that? Over to you quickly. Very good. Prem, Almas, they are saying amortization. Correct. See, in case of PPE, something that you call as depreciation is called as amortization under intangible assets. Okay, so you can say the nomenclature changes. Fine. But this amortization again is based on the same principles. Fine. So now what we will do is, now in a similar manner, what we did for PPE, will consider the various accounting requirements which are there. And based on those accounting requirements, will try to think about the audit procedures which would be required in respect of audit of intangible assets. Okay, so now for intangible assets, once again, as a first step, what do? Obtain a listing. Yeah, so that you can have this list of intangible assets at one place. Yeah, you can have this list of assets at one place. So obtain a listing. Now, one, you have this opening balance. For the opening balance, we have the standard procedure. Can you tell me what is the standard procedure for the opening balance which the auditor will be required to perform? Same thing. Trace to previous years audited financial statements. Correct? Trace to previous years audited financial statements. Yeah. Okay. Then next thing, what will you have? Additions. Additions. In respect of additions, what will you do? Again, same thing. Sample testing will be done. See, if these are some items which are purchased, okay, for example, if you go purchase a trademark, a patent, yeah, so you'll have agreement and of course the invoice. So Sample testing you'll do for the additions. You'll look at the invoices. You'll look at the agreements. Okay, so these things you'll do. Fine. But here again, the addition could be the one wherein the asset is getting developed. Okay, asset is getting developed. So now one, of course, is the sample testing. What if the asset is getting developed? Means it is internally generated. So we understand that if there is any internally generated goodwill, that will not be capitalized. This is what the standard requires. But if let's suppose there is any other internally generated intangible asset, now on that part, again, there is a complex accounting requirement, okay, which will have some criterias, okay, which requires the management to assess, first of all, whether this activity or the process which has been going on, whether it is in research phase or development phase. Okay, because if it's in research phase, then any of the costs management will incur during this research phase, that will go to P&L. If there is anything which is in development phase, so any of the costs which the management will incur during the development phase, that will get capitalized. Yeah. So this assessment will of course be done by the management, but that assessment of the management needs to be understood, needs to be reviewed, needs to be verified by the auditor. Okay, so this area of assessment of internally generated intangible assets, of assessment of whether the product or particular asset which is getting generated is in research phase or development phase is quite challenging. It's not very something easy exercise, I would say. It requires detailed assessment, a lot of deliberations, discussions, understanding of the process. Yeah, so that's how it's done. Okay, so all of these procedures therefore will have to be designed, will have to be taken care of by the auditor. Okay. Moving further. Now, next, here again, there will be some deletions. Yeah, deletions means the sales which have taken place. So that will again be tested on a sample basis. And there will be the supporting documents for the sale, and the corresponding accounting means whether that has been appropriately recognized. Generally, there will be a loss. Generally, you don't see a gain coming up through these types of sales. But if at all there's a gain or loss, where will it go? Gain or loss on sale goes to P&L. That goes to P&L. Okay. Then the reduction, as we discussed here again, amortization is required. Now, amortization, this working will have to be obtained. Yeah, so this working is in respect of this calculation, which you can call it as re-performance, okay, recomputation. Yeah, so that exercise needs to be done. That exercise needs to be done. This calculation, this recomputation needs to be done. Yeah. And in relation to this amortization, the other part is about the useful life. Okay. Generally, the residual value for intangible assets will be nil, but of course, it will be there. Yeah. So the assessment of the useful life or residual value which the management has done, if at all a reassessment is required, whether that reassessment has been done or not. What has been the method of amortization? Again, you can have SLM, or you can have this WDV. Yeah. So all of those accounting criterias which the management would have followed, they would be included in this working part. Yeah, so in this working part, you need to understand that. Okay, whether that has been appropriately captured or not, what has been the basis of doing that. Yeah, so it's all about again getting onto the valuation as well as the accuracy. But please remember that this is more of a P&L component, but this will have some impact on the valuation of intangible assets. So this is how it's required to be looked at. Okay, then then of course, when it comes to the intangible assets, so in case of intangible assets, there will be some disclosure requirements, presentation requirements. Yeah, some of those. So let's look at those procedures. So what we will do once again is we'll flip through some of those audit procedures in the study material. Try and understand what are those audit procedures. Okay. So now first, whether the intangible asset, okay, is in active use or not. Yeah, because that's how the management would have categorized it, and accordingly, the management would have done its accounting. Accordingly, management would have considered its amortization criteria. Okay. For example, for verifying the existence of software, auditor should verify whether such software is in active use by the entity. Auditor should verify sale of related services goods during the period under audit, using which, uh, basis which, uh, on the basis of such software, it would have been done. Yeah, so that part needs to be considered. For verifying the existence of designs or drawings, auditor will verify the production data to establish if such products for which design drawings were purchased are being produced and sold by the entity. Okay. Further, verify the movement in the intangible assets. Here again, you'll have some opening balances, procedures on opening balances, procedures on additions, deletions. So you can also, in a way, for your examination purposes, for your revision purposes, mark some of these points as similar to P. See, there are a lot of similarities between these two items. So I would suggest that for the purposes of your exam, maybe you can just note down some of these items to be quite similar. And you would have found this to be quite similar. Yes or no? Yeah. So I think this will help you a great deal in terms of your revision later on, if at all you are planning to use this. If you are not planning to use this document, maybe you are preparing your short notes, you can just say that a lot of items are similar. Okay. So that's how your revision time will also go down, and you will also be able to sort of establish the relationship between two items. Okay, further on the valuation part, then I think we discussed it's about the amortization workings which need to be checked. Yeah. So the useful life, the workings of amortization, all of those things need to be looked at. For rights and obligations, again, the supporting documents basis which the company is holding all of these intangible assets will have to be looked at. And then, of course, a very common procedure which we have for every line item, that is about presentation and disclosure criteria. Now, once again, for intangible assets, what will you have? There will be a detailed note wherein you will have the categories of intangible assets similar to PP. Then you'll have this block, means the gross block, then the accumulated amortization, and then the net block. So exactly similar is such criteria. And of course, further to that, any other disclosure requirements which would be there in relation to that, those also need to be taken care of. Okay. All right. So this is it that we had on intangible assets. I think we can also move on to the next line item, trade payable. There is another line item, other current liabilities. So it's sort of combined. So we'll discuss both of them. But before we move on to this, any questions, any doubts that you may have, please let me know. Yes, trade payable and other current liabilities. Yes. No question? Sure. Yeah. So can you tell me your understanding of trade payable? What is a trade payable? Anyone? What do you understand by trade payable? I think this is a very, very common item and something which you find in the financial statements in the books of accounts very commonly. What is your understanding about this around the trade payable? Okay, great. I think creditors, that's what Prem, Rehana, Sunil, Almaz, Priyanshi, they are saying. Very good. So basically, we are talking about creditors here. Okay. Now, when we are talking about creditors, okay, so let's try to understand. In a way, we are talking about payable for goods. Yeah. Say entity purchases goods during the year. Correct? And there's a payable in respect of that. What do you call it as? Trade payable or creditors. Yeah. So actually, we are talking about a cycle once again. And what is that? Procurement linked to the payable. Yeah. So this purchase part, this is the, you can say, P&L component. And this, of course, is the balance sheet component. Yes or no? Yeah. And in relation to these purchases, or you can say corresponding to these purchases, one asset also gets generated that we have discussed. Remember that? That was inventory. Remember that was inventory. Yeah. So its payable part goes to creditors and corresponding to this purchase, the company will generate inventory. Now, this inventory is something that we have already discussed quite a lot. And its linkage with purchase has also been discussed. Yeah, this has also been discussed. Now, when we'll cover payables, so therefore we'll focus more on the payable part. not on this inventory part or the purchases part. Correct. So that's how we'll approach this. Now, in relation to payables, so let's talk about trade payable. What are some of the procedures you'll get to see? Now, here again, before I get down to various other procedures which would be there, here again, a very important procedure which is required to be performed by the auditor happens to be direct confirmations. This is a very important procedure. Yeah. Now, in respect of direct confirmations, once again, if you just want to map it, if you just want to link it for the purposes of your notes, and if you just want to maybe create a summary, you can say this process of obtaining direct confirmations in respect of creditors is quite similar to what you have in case of trade receivable. Okay, yeah. So let's put down some of the procedures over here. So what will be the procedure? First, obtain the listing. Yeah, so that you have the population. Through the listing, you have the population of the trade payables. Okay. So once you have the listing through which you get the population of the trade payables, what do? You will select the sample. Yeah. So the second step will be what? Sample to be rolled out. Here again, you will not roll out for each and every credit. Not possible. Again, practically, yeah? Not possible. So you'll roll out on a sample basis. And for rolling out, again, same methodology. Management letters. Yeah. Sent directly. Required to be obtained directly. Okay, so all of those procedures are going to be exactly similar. There's not going to be any difference. What if the confirmations are not obtained? Can you tell me? What if the confirmations are not obtained? Anyone? If the confirmations are not obtained, what will you do? So what is it that the auditor will do if the confirmations are not obtained? Priyanshi says resend. Rihanna says alternative procedure. Prem is saying alternative procedures. Almas says reminder. See, here again, you need to understand that you will not jump to the alternate procedure straight away. Okay, let's try to understand. First of all, what will you do? You will send reminders. You will send reminders. Okay. After 2 to 3 reminders, you will plan for alternate testing. In case of alternate testing, what will you do? Subsequent payments. Yeah, you'll check whether the subsequent payments were made or not. And you'll also verify the invoices for the supporting documents. Correct. Exactly similar to what you had in case of trade receivables. All right, exactly similar. Yeah. Further, if we talk about trade payables, once again, please remember, as far as confirmations are concerned, here also you need to remember that procedures will again be of two categories. One is the one which the auditor will perform. Second, which the management is supposed to perform. And what is that? Internal process of obtaining confirmations and reconciliations. Okay, so that's the process. And this again needs to be verified by the auditor, needs to be looked at by the auditor, whether this has been taken care of or not, whether this has been done by or not. And if this is done, so what are the reconciliations and what is the resolution of the reconciliations? Means whether that has been taken care of, whether that requires any adjustment entry, all of those requirements needs to be done on the part of the auditor. Okay, clear on this? Yeah. So in relation to trade payables, this confirmation procedure. So wherever you'll have this confirmation procedure, that is considered to be of utmost importance. Yeah. So here again, it will be of utmost importance. But we are not yet done on trade payables and other current liabilities. In the next session, we will continue on this. Okay. So now what we can do is now we can just look at your queries, any doubts that you may have before we conclude. Yes, over to you. Any questions, any doubts that you may have, please let me know. Tell me, any questions, any doubts? No question, sure. Tell me quickly. Any questions? No? Sure. Then I think we can just conclude our discussion. Manish, can you check with Ankita ma'am if she wants to join again?
Yes,
I
yes.
think Rihanna has a query. So Rihanna is asking, sir, will we practice questions for each balance sheet? Yes. For each balance sheet P&L item, will keep doing the same exercise. Huh? Okay. So we'll cover all of those items. That's correct. We'll do that for all. Then I can see one query coming from Dhanush. He's asking, sir, how do we value destroyed goods or damaged one as auditors? See, in terms of their valuation, once you come across such goods which the management must be having some process of identifying, so they must be recorded at the NRO because generally their valuation will go down. So as an auditor, what do you need to check? Whether they are appearing at the right value or not. Okay, so that's going to be your responsibility. Okay, so if you don't have any further questions, we can just conclude this discussion. Thanks everyone for your time and for this wonderful participation once again.
Thank you, sir, and thank you, students, for your participation. If you have any doubt regarding this chapter or subject, you may ask in the chat or through the portal. And the next class is on Monday, 14th of April. So before coming to the next class, please do revise whatever the topics covered in this class or the previous class. Okay. And if you're having any doubt or any query, you may ask in the chat regarding any. Okay, so there are no queries. So, okay, so thank you, Achal sir, and thank you, students. See you all on Monday.